Ladies and gentlemen, a damage report after the recent drop. I'm going to give you everything you need to know right now. Is Bitcoin still intact? What exactly happened? All these questions are going to be answered. But what actually happened, we'll start off just by outlining this in the introduction. I'm going to try and skim through the data today because I don't have much time, but I just want to get the key points out, hopefully in under 10 minutes. So let's see what happens here. We've got the descending wedge formation that I mentioned in yesterday's video. You can see it there in yellow. I've just circled it. And that descending wedge formation was structured within the larger descending channel formation, which identifies the entirety of this macro range, right? The macro range is not a horizontal range. It's not a parallel level. It's actually a descending channel formation in this occurrence. And it's been that way for about going on 5.5 months. Now, what I identified yesterday is that within this descending channel formation, we had formed a smaller wedge structure. And within that wedge structure, we had an RSI relative level to the wedge structure, giving it extra validity. So you can see the wedge structure there on the hourly chart RSI, as well as the hourly chart RSI's own triangular structure. I said very clearly that if Bitcoin broke down from that wedge, we would be in a bit of trouble. And that's exactly what happened. Now, we broke down from the bottom of the wedge. And within hours, within 3, 4, 5 hours, we went downwards from 55K all the way down to 52.5K. And we literally threatened the entirety of the macro structure itself. We were very, very briefly below the broader channel formation. You can see right there, the white line, that is the bottom of the broader channel formation, as you can see by that small circle right there. So for about an hour, Bitcoin was lurking and lingering below the entirety of the macro range structure. Now, obviously, it's a macro range structure identified by five months of price action. So an hour is not really going to do too much to debunk it. And obviously, we've done this before. We did it over here on a couple of occasions. We did it over here as well on a much bigger occasion. And so, yeah, that didn't mean anything really. I mean, it's not a breakdown or anything like that. You know, we're going to need to see some big closes to consider that a breakdown, like a weekly candle close. But here's the thing. The weekly candle is closing in 1 day and 17 hours. And although we might not be below the entirety of the channel itself, we are currently below a very important weekly RSI level that if we close below could lead to a breakdown of the channel itself next week. I've been saying over and over again, what have I been saying, guys? I've been saying it's not a safe time to be holding altcoins, and it's probably not the best time to be holding Bitcoin. Certainly not the best time to be buying Bitcoin. I think I've been proven right here. Now, that's not to say I'm bearish. I'm not bearish because the macro structure is still intact. I'm actually macro bullish, but you can be macro bullish and cautiously optimistic while also remaining on the fence about buying or selling. Right? Why would I be buying here? Right, because although we are in a macro uptrend, it's very clear this is abnormal price action. It's very clear that the traditional markets and the macro economy are in a plague of uncertainty. And it's very clear, of course, that when it comes to buying, you need to see confirmation, and the macro confirmation would come at the break of the channel. So, I mean, if you are in the market right now, I'm not going to say it's the stupidest thing ever. You know, it is technically a macro upwards trend, but perhaps next time reconsider your positioning in the market, right? There's nothing wrong with selling and buying back when there is absolute upside confirmation. And that's not me telling you to sell. That's not me saying anything. That's just me justifying what I personally did. Now, regardless of any of that, what we can do today is look at the charts themselves. As we just mentioned, it's the weekly chart RSI that is in trouble here, right? And we're going to do a deep dive into that. We're also going to do a deep dive into short-term, medium-term, deep dive into Ethereum total cryptocurrency market cap and the S&P 500. We're just going to get key points out. We'll try to do it in under 10 minutes. Let's see what happens. Guys, before we get into it, Bingx and Bitunix, right? 2 exchanges I advertise on this YouTube channel. Both of them, sorry about that, you can get a 15% trading fee discount below. They're both global non-KYC. They've both never been hacked before. And again, sign up with my referral link for that 15% trading fee discount. Get on those exchanges. I handpicked them myself. They're not just random exchanges that emailed me, right? I actually picked them out and I use them both very regularly. Right, so here's a more simplistic view. I understand this chart right here is very cluttered. There's no real reason to look into such a cluttered chart today. When we're talking about the macro levels, all of the inter-range levels are kind of a bit irrelevant to us right here. If we're talking macro, we need the macro levels. Now, in my view, the macro levels right now is the channel itself, but also 2 very important ascending lines that I have in yellow here, right? Let's go to the daily chart so we can best identify what these lines are and what they mean. And there's a reason I'm bringing up the daily chart. I'll show you in a second here, right? The first line stems all the way back from 2018, all the way back here, past the COVID drop, past the 2018 bear market low, all the way to 2018 on this wick right here in October, comes right through the price action, being very, very consistent, slight overshoot there. Other than that, perfect retest, coming right through the price action. Resistance, support, right? and coming all the way up to last year, 2023, and also in this year. Resistance, support right here. And as you can see, if we draw it perfectly, which it actually wasn't drawn perfectly, but again, it's quite hard to do these things perfectly. What you can see is that there was a perfect daily candle close right on top of that 6-year long support line, right on that recent drop. This to me signifies how valid this line is, right? Not only has it acted as support and resistance on every single occasion, sparing one fake out back in 2018 on its second retest, it's also acted as a very important daily candle close level, and it's also in the vague support region identified by the descending channel formation we're looking at right now. So this is a very important line. The other important line is a line stemming backwards from October last year, cutting through various wicks. As you can see, that actually led to the bottom itself over here at 48k or 47, sorry, it's 49k. And then of course, the third major line is the support zone of a channel itself. So in my view, the bull market is not over, or the bull market structure rather is still intact until all these lines break. If all of these lines break, yellow, the second yellow, and the white line, if they are all gone, in my view, there's really no reason to be bullish on Bitcoin anymore. There would be too much damage done, not only in those lines breaking themselves, but also in the things that we're not seeing on the chart right now being broken as a result of those lines breaking. So all the indicators, bull market support band, 50 SMA, 200 SMA, all these things, they would be broken as well. Now, if we saw a very, very brief, very, very quick retest down to something like, let's say 48k, which is a support zone, maybe that would suffice. But as I'm saying, these are macro support levels we're talking about. And so to confirm them being broken, we need a macro close below them. Something like a weekly candle close would confirm it completely. And so, yeah, that is entailed within that comment. Let's go back to the weekly chart here, because you know, on the drop we saw, we are currently below the 2018 support level, which is actually very, very bad, right? That was my sell point in the last drop downwards, right? So it's actually very bad news to be below that zone. And, you know, I'm not really reassured by that, given that it held on a daily candle close. It's not reassuring to see the price below it. Also, what we see right now is Bitcoin struggling to get back above it, which is a bit concerning. We'll do a brief look in the short term in a second, but what I'm actually concerned about right now is not necessarily those support zones, but I'm actually most concerned about the weekly candle, because the weekly candle is closing in 1 day and 17 hours. And, you know, a weekly candle close below that 2018 support level would confirm it being broken for sure. So that's bad news. But the big bad news about the weekly candle, in my view, is the weekly chart RSI. And this is something we've looked at very much in the last few weeks. I've looked at it maybe 15 times on this channel already. It is the triangle formation forming on the weekly chart RSI. What you'll notice about the weekly chart RSI is there are very important resistance zones that form that lead to very important breakouts. So we've got a resistance zone right here that formed. It led to a breakout, marked the COVID bottom, and led to a bull market. Another one right here. Let's go ahead and try and draw it in. I'm just drawing them roughly here. Another one right here from the peak in December 2020. When it broke to the upside finally, it led to the bear market bottom in 2023 and led to the reversal, the macro reversal of a 1 year long downwards trend. And another example from here in March 2023 that led to the end of a 7-month consolidation and the move that ultimately led us to be at all-time highs at 73k. So basically what I'm trying to illustrate to you is that the weekly chart RSI is incredibly important. And right now we have a consolidative triangular structure forming on the weekly chart RSI, one of the lines stemming back from 2018 and one of them stemming back from the peak here in March. What you'll see is that structure was going to reach an apex in the middle of September, and this is why I've been saying over and over again for about a month and a half that September is going to be the big month. I mean what I say, right? Everything I've said in the last month has proven to be correct so far. September's going to be a big month, correct, right? And now, here's the threat. We know the weekly chart RSI is incredibly important because there are very few fake outs. When we see a resistance line, when it breaks, that is the direction we go. There's very few occurrences in history where we've seen fake outs on the weekly chart RSI in relation to price action. So we know for a fact that breaking down from this triangle is a very bad sign. It's not certainly the end, but it's a very, very bad sign. And we know breaking it to the upside is a very good sign. Unfortunately, we are hovering below it. Now, we have not broken down from it because it's not, you know, a weekly candle close yet, but that weekly candle is closing in 1 day and 17 hours. And if we close below that level, I mean, that is a really, really bad sign. Look, let's look at that level, right? If we go back in history, this level here, we'll make it pink so we'll make it yellow so you can see it here, right? Look at the time we broke down below that level. We broke down below it once before. When did that happen? Well, it happened over here, right? We retested it. It led to the bottom of the sharp decline from the bull market top. It led to a dead cat bounce that lasted 4 months. And when we finally broke down below it, it led to the breakdown from that dead cat bounce structure that ultimately led to the bear market that took us to our bear market low. That is the last time we broke below a level like this. It led to the bear market low, okay? Breaking below it again, given its history, is really not a good sign. So 1 day and 17 hours from the time I'm recording this video, we'll see the weekly candle close, and it's absolutely mandatory, really, that Bitcoin closes above that weekly chart triangle. Now, I shouldn't use the word mandatory because it implies that breaking down from that weekly chart triangle would confirm a bear market. That's not the case, but it would be a very, very bad sign. The only thing, let's be very clear, the only thing that would confirm a bear market is a break from all of the price chart levels, right? What I'm saying is the weekly chart RSI is very indicative of price chart level breakdowns and breakouts. So breaking down below from it would not be a good sign at all. So here's what we need to do. Weekly candle close needs to be above that or within that triangle, preferably above it, but let's just say within it in 1 day and 17 hours. And ideally, the weekly candle close also needs to be above all 3 of the critical lines in the weekly chart, the 2 yellow lines and the channel support. If that does occur, we're back in the clear, we're back in a consolidation range, and we'll have another opportunity to move upwards again. If that doesn't happen, Bitcoin's in grave, grave danger, right? Now, brief look at the shorter term time frames. There is some positive signs going on, let's say, the 4-hourly chart. I looked at them before. I'll just bring them up briefly. You know, although we broke down from that wedge formation, let's delete these blue lines here. Let's delete the RSI lines as well. I just want to show you a few things here. Although we broke down from that wedge formation, I'm going to go ahead and say that the top line of the wedge is still valid, so that will be our breakout line. If we break that pink line on the screen, we'll be back in the clear on short term. We can get some upwards momentum and start attacking to the upside again. So that's our target for the short term. Right now, there are some good signs. As I said, we have a bullish divergence in the RSI, which is always good to see. We have descending volume in the downwards trend, sharply descending now. So that's good to see as well. But, you know, there was a massive volume spike there. And, you know, we just hope this upwards move, we're seeing this small upwards move here, does not roll over at the resistance zone. There is a chance for a resistance support flip. There is a chance for a rejection from that pink line and going downwards again. Again, all of this will be clarified in the weekly candle close. It's really, you know, the same story on the S&P 500. Guys, be very clear here. It's not just about Bitcoin, right? It's the macro economy and the uncertainty in the macro economy that is causing all of this, right? Because Bitcoin and the S&P, they move by the same mechanisms, right? It's all macroeconomy related. And given the fact the macroeconomy is in such a dangerous position right now, and people don't know what's going to happen, they're thinking maybe it's going to be a recession, some of them, right? This is why we're seeing all this uncertainty and fear. And so in the same way that Bitcoin has a weekly chart RSI triangle that's currently breaking down, that we really need to not see a breakdown of, so does the S&P 500. Look in yellow on the RSI here. This is the weekly chart on the S&P 500. Exactly the same story as Bitcoin. Weekly chart RSI triangle that is hovering below it currently, it really needs to close above it. So it's the same problem here. Again, it's not just Bitcoin, it's all assets. Looking into Ethereum, similar story. You know, Ethereum is below its critical breakout line. Let's go to the daily chart and see it. Below its critical breakout line in yellow, it's just retested support. It's on the edge of a cliff. We can't really go much further down. If we go to the weekly chart on Ethereum, what we see very clearly in a similar fashion to Bitcoin and the S&P is a weekly chart RSI wedge, but we're not below it. We're just hovering right on top of its support zone. So again, at threat on the weekly chart RSI. You'll notice a pattern here. All these weekly chart RSIs are saying the same thing. We're either over the cliff and need to desperately try to bloody reach up to the edge before we fall, or we're very much on the brink of falling off the cliff. Same story in the total cryptocurrency market cap. Do I even need to tell you? It's literally the same story as Ethereum as Bitcoin. On a cliff, weekly chart RSI says the same thing. So we're in trouble here, right? And again, I'm rushing this video. You can probably tell I'm getting out of breath as well. I'm trying to rush this out because I've got a place to be in a second here, but I just want to get this content out to you. Hope you appreciate it. The weekly chart RSI, the weekly close itself will be very, very, very important in 1 day and 17 hours. I'm going to update you more extensively tomorrow. We are, you know, let's just rest assured here, it's not over yet. It's not destroyed. Nothing's destroyed yet, but a lot is riding on this weekly candle. And if we fail to get a good weekly candle close, we will be in grave danger. Right now, we're not quite in grave danger yet. We're still just kind of cliff lurking, just loitering around, believe it or not. Even though we saw it drop, nothing's really changed that is too concerning. It's really the weekly candle that will decide a lot. So keep that in mind, guys. Thank you for watching. I hope you enjoyed. Again, I implore you to go and check out those exchanges. 15% trading fee discount with my referral link down below. I also implore you to go ahead and check out the Crypto Academy's Become a Trader 10 unit course, which is currently on sale. If you want to learn how to trade, you want to learn how to do TA, this is where you can do it. All the information is on the website, including our contact information via email address. Another thing you can check out is the VIP group on Telegram. You can see on Telegram there, we've got 2 years, right? Let's just start with this, a 2-year long track record with all of our trading results, a 78.39% win rate over the course of 2 years. Very good track record. You can also check out our information here. We post 4 trading signals per week. The price is $309 until April 1st. And then we also have access to a group chat with 115 other VIP members where you can discuss the market 24/7. Very good value there. Go ahead and check that out. And then last thing I'll mention, guys, before we end off today, is my second channel, JS Quinn. Look at the titles to those podcasts. If any of those titles interest you, you can check out those episodes. I'd highly appreciate that. Thank you guys for watching. I hope you enjoyed. Sorry for being rushed today. I'll give you a more extensive update tomorrow. Have a good one.